What's up, traders? So in this video, I'm going to be going over a trade which I didn't quite catch, right? But we're still going to be analyzing how you could have entered this position. So entering this position or entering any position comes down to having three basic things. Now, I am a proponent of strategy above anything else. So your strategy or my strategy has essentially, I call it the triple X because it's made up of, surprise, surprise, three things. Kind of three layers to it, right? The first is you need to have your key level set in stone, right? Your key level. So that's basically the gray box. Why did I choose this gray box to have a reversal lower or higher, right? Understanding where you want to be placing a trade is very important. So your key level comes down to where, right? Now, once you have that, once you have essentially a fair value gap, which is what a key level is, you then need to know what are you looking for. So what you're looking for really is buyers versus sellers, right? One other thing I look for is the PO3. I do look for PO3 or power of 3. That's important to understand. I look for power of 3, PO3. Now, once you have that, right, that shows you what are you looking for. So you need to know what you're looking for because what you look for will ultimately determine why you're looking to buy and sell in the first place. So the third thing I want to go over, let me just quickly move this, right? The third thing you want to be going over is why do you want to be buying or selling in the first place? And you need to understand basically passive buyers versus sellers. You need to understand who is passive and who is aggressive. Now, with these three things, a lot of traders mess this up, right? So I'm going to kind of break this down completely. So on the S&P 500, we had a nice sell-off, a nice flush down, filling in some of the gap that was left overnight on ES from Monday to Tuesday. So what's important to understand now is how you go about a pre-market plan. So I'm just going to be showing traders my pre-market plan. So a pre-market plan essentially defines your levels, what are you looking for, and why you're eventually going to look for it. So the pre-market plan, if I go back to it, is one of the most important things a trader can have, right? So this is what my plan was looking at. This was at around 8 a.m. Eastern, right? So at 8 a.m. Eastern, I'm planning my levels. So these are the two main levels I was looking for. So if we break, three. So if we break above this top level, I am bullish. Now, if we break below this bottom level, I am bearish down to this level and eventually the Asian low. That is how simple trading can be if you actually understood what to look for. So key levels are very important. Now, just a couple of things about this key level. So yes, we have the Asian range over here, and we had a 15-minute FVG just over here. So we have this impulsive move to look at. So when price makes a fair value gap, right, we know from basic principles when we see a gap or a void in the price. So if I just kind of zoom in, when we see a gap or a void in the price, we want to be kind of waiting for price to fill the entire gap. The gap actually started here. The fair value gap was here as well. So my key level is going to be this one. So people often ask me, how do I validate my key level? So validating key levels is not that difficult, right? Because once you have the Asian high like this, you're looking for price to take out the Asian high. So this here is what we call manipulation. This is kind of step 2 in the AMD model. So we have accumulation, step 1, manipulation, step 2, and we're looking to catch the distribution, which is step 3. So these are the 3 steps every trader should be aware of, but understanding accumulation, manipulation, and actually catching the distribution is where traders go wrong, right? If you cannot catch the distribution, there's no point even knowing AMD, right? So this is how we're going to break that down. So another thing that gave me confirmation for this particular key level, the reason I felt confident selling is because of what I call the weekly power of 3, essentially, right? So if you go to PO3 and you change the setting to 1 week, this shows you the weekly candle. So this weekly candle, as you can see, so Monday opened up here. So this was Monday's price action. We had this huge gap up. So what you want to understand is how does a weekly candle form? Or how does any candle form, especially a higher time frame candle? If we open and we expand, right, and we're seeing some kind of weakness, if we're way above the weekly opening price, so the weekly opening price is all the way down here. If we're way above that, if we're way extended above that here, there is a good chance price will sell off, not all the way down to here, but you want to look at the weekly opening price as like a magnet. Now, this kind of, I guess, magnetic force depends on how far away you are from the weekly opening price. So the further you are away from the weekly opening price, the more likely you are to kind of rebound or give you that sell, basically. So you want to be selling above the weekly opening price. And that is how I form my key levels. So it's not an accident I chose this key level, right? So this key level is derived from a few different things. So yes, we had a fair value gap, which I've already labeled on the left, right? So yes, we had a fair value gap. That's the first thing. All right. The second thing is we had the PO3 or the weekly power 3 in alignment. The third thing we had is we had our accumulation, we had our manipulation. So what do I mean by manipulation? So for me, a manipulation, or the quickest way you can spot manipulation, is by looking for a sweep of the Asian high. So this is accumulation. This now forms as manipulation, and we are now interested in the distribution, right? Notice how I'm catching the distribution after I am convinced I have a manipulation. So that is kind of the power of 3 kind of simplified, I guess, right? So now with that in place, let's kind of go into step 2. So now that we know where we're trading from, this is a key level. The next thing is, what are we looking for? So the where and the what kind of combine. So when we go down to the 1 minute chart, so on the 1 minute chart now, we are waiting for price to come into this area. All right, so what we're basically looking for is a break and retest to the downside. So what you're looking for is something like this. You're waiting for price to enter. Price will mess around, will break, we will retest, and then we'll head lower. And that's all you're looking for. You're looking for a break and a retest. So that's exactly what happens. So the break and retest won't look the same every day. That's not something we can expect it to look different every day. But you need to understand the fundamentals of buying and selling. So now that we have step 1 out of the way, step 1 is the where. So we have a key level. Step 2 is you want to understand what to look for. So what you're really looking for is buyers and sellers. Buyers versus the sellers, right? So this is where our friend comes into hand. Here we have the buyers and the sellers. So here we have the same key level, 15-minute fair value gap. Now, when we dive into this particular market, let's see if it lets me go down. So we are going to be breaking this price action down, right? So we're going to be breaking this down. So notice how price comes into this area and we break below this area. Now notice how we have 2 breaks, one here and one here. Now a break is a very interesting thing, right? You want to understand how a break is happening. So a break, there's 2 types of breaks, right? So notice how here we see a large kind of aggressive seller stepping in the market, right? 227 for 92. That is a red delta, which means there's significantly more aggressive sellers than buyers. That shows you a follow through to the downside with volume. So this is how volume is used, right? So notice even here we see red delta, we see a lot of red delta, but we're seeing follow through. Now this is important. We are seeing follow through in price. This is important to understand. We see the same thing over here, right? We see follow through, follow through, follow through. We see a lot of follow through in price. So for those who don't understand volume, right? Volume is a simple concept. Let's say I draw another key level down here like this. Let's say this is your key level and you're looking for a break. We're only interested in the break. So we come in, we try and hold, we break. Now this break here needs to be supported with volume. So basically you want to be trading in the direction where volume supports. So this is very important. So in this case, we see volume. Now we see a break to the downside supported by volume. So basically we have a large bid volume. We have a large bid volume, which what that means is that the bid is a lot greater than the ask. So this gives us what we call a negative delta. So the ATAS platform is my platform of choice. I think it's the best platform for order flow or just trading as a whole. Now what you're looking for is negative delta. So that shows you we see a break, we see bearishness being supported by volume. So the key word here again is volume. So we see that over here on the ATAS platform, just over here, or the order flow platform. We see the market breaking lower, supported by heavy delta. That's the first thing. So our break has been confirmed by sellers driving price lower. Now from here, we're going to focus on the retest. And so the retest now is quite interesting. So this was the retest itself, right? So notice how the market opens, of course, at 9:30 Eastern. We don't want to trade the first 5 minutes. So the first 5 minutes, I'm just going to kind of highlight like this. So this is the first sort of 5 minutes. So in the first 5 minutes, I guess, of market open, what are we looking for here? So of course, we understand the first 5 minutes for me sets the tone. So we're at a key level. Perfect. Now we're analyzing buyers and sellers. So we've analyzed sellers. We have analyzed sellers and we see sellers being rewarded here. Sellers are being rewarded here. So this is good, right? This is where sellers are being rewarded. Now we want to focus on what's going on inside of the key level at the market open. So from 9:30 to 9:35 EST. So when we break this down, right, what we're looking for is, can you see now, this is now 1, 2, 3, 4, 5. So what's interesting here is we could not really break above this level with a body, right? We broke below this level with a body here, 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 and then here as well. So this is where we look for breaks above. We look for follow through, right? Who is being rewarded? So we're seeing aggressive sellers being rewarded. But what's interesting about this retest is we're looking for weakness of buyers. Weakness of buyers, there's lots of ways to say this: trapped buyers, passive sellers in control, absorption of buyers. There's a lot of different ways I may have said it in the past. But what we're looking for, specifically if we dive into this, is if you just look at the first candle here, we see numbers like 154 for 377, all the way up for 0 to 8, right? 675 for 804. So what this shows is that we see more aggressive buyers on the right hand side than the left hand side. Now we see the same thing here, we see the same thing here, we see the same thing here, and also at 934, 935 we see this over here. So we see follow through of sellers, these aggressive buyers in the first 5 minutes here, 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 and here, have failed to break above the level. So going back to what a retest will look like, right? So once you have a break, you want to analyze the retest. And so this retest in this case is giving us the confirmation to sell. Now the reason why it's giving you the confirmation to sell is simply because of this. Aggressive sellers have won over here, and aggressive buyers have lost over here. So for those who've been following my content for a while, we understand we've now looked at buyers and sellers. So now you know what to look for. Now the question is, why are you selling? So understanding why you are selling, and understanding more importantly why the market sold off from this region, is, I guess, the main question, right? So how could you have capitalized on some of this move to the downside? So the way you do that simply is by understanding that in this region here, aggressive buyers failed. Now, when aggressive buyers failed, they don't have any follow through, which means that passive sellers are in control. Passive sellers. So the way you want to look at passive sellers is that they're going in with limit orders, right? So those orders aren't showing up on the delta footprint chart. So you can't see passive sellers here. These are only aggressive sellers hitting the bid and the ask aggressively at these prices. But what you want to interpret from here is that if these aggressive sellers are failing, it shows you that at this key level, so this is now ES 60 at around 66.87, at 66.84, round about the 84 to 87 area, we see passive sellers dominating price. And that is the reason the market moved lower, right? So that's what I wanted to go through in this case study.